Hey everyone, this is John Robinson from Blueprint. Today is August 31st, 2022, and this is the monthly asset allocation update video. In this video, we'll go through the asset allocation changes as we head into September, as well as give some thoughts, some high-level takeaways that might help you explain these changes to your clients. In addition, we produce this video in conjunction with our co-founder's note. And in this month's co-founder's note, we write about buying the dip versus trend following. When you have markets like we have in 2022 with a pretty high down volatility, there is always a temptation to buy the dip. And that comes from a lot of emotional factors: greed, fear, hope, and perhaps most damaging, ego. So we discuss how having a trend following type process helps you, in some cases, buy the dip unintentionally, just as a part of the process, versus taking what we believe to be a larger risk from continually trying to buy what you feel is a low point in the market. So I'd encourage you to go back and read that if you haven't already. But as we look to September, the asset allocation changes this month are pretty boring. We had a pretty sharp rise, mainly as a continuation of July in large cap US stocks until about mid-month. And then from that point on, we've had a decline. That decline was basically of a magnitude that keeps the trend intact, and that would be the downtrend. So as we go into September, downtrends in US stocks remain where they are, and at the asset class level, there is no change to exposure. Same thing with foreign developed and emerging markets, as well as real estate. Real estate in U.S. large caps, as I mentioned, did come close to a trend change, at least in the intermediate term. But as a result of the past, let's say 10 days of trading and the decline we've seen since then, that has now shifted and will basically have status quo as we go into September. On the fixed income side, U.S. and international treasuries, there will be no change. They continue to be in downtrends, marking sort of at least a cyclical rising rate environment. Inflation-protected bonds are the same. Alternatives being expressed by gold will remain where they are as well. Gold had a similar phenomenon happen where it increased enough to give us an indication that there might be a trend change, but the past 10 to 15 trading days have really negated all of that. And short-term fixed income will remain the same as well. Now, when you look at this graphically and look at the total portfolio, you can see that one thing really stands out, and that's U.S. Treasury bonds. And the way we are expressing that now is through ultra short-term duration fixed income. This is where we've been really for about the past year in terms of our duration, our fixed income duration. On the equity side, you can see that we're still well below our baseline at minimum levels in U.S., foreign developed, emerging, and real estate. So the portfolios remain very defensive as we try to protect compounding and protect against further declines in equity markets until the trend, either over the intermediate term, the long term, or both, resume to the upside. So what are the key takeaways? Well, U.S. stocks remain in downtrends. So there will be no change as we go into September. The portfolios will largely remain allocated to short-term duration fixed income. So as you'll note in the co-founder's note, we write a lot about having a process, right? A process for making decisions in markets. And we believe in having a process in nearly everything in life, but particularly in markets, because our egos get invested. And we put that into the context of trying to buy a dip. And we use foreign developed equities as an example of foreign developed equities have made more than 30 new lows since their peak last September of 2021. So if you tried to time that and your ego got involved and you wanted to be right in making that call, there is a high probability that you would be down more than just having done nothing. And foreign developed equities are in a fairly significant, or at least above average, drawdown at present. So what we believe is removing your ego from the decision-making process and remaining clear-eyed and objective. In doing so, at least in our view, looking back at the past, real-time and simulated data, is that by following a trend following process and remaining objective, you actually end up buying on a dip, simply because you allow the market to form a bottom before you buy. And we often talk about, we buy at about the same place that value investors end up buying, except value investors buy before the actual low and trend followers buy after the actual low. But if you were to draw a dotted line across, the average price is nearly about the same. We're more comfortable with the trend following process simply because if the market continues to go down and if something happens that's never happened before, we feel like we have a higher probability of protecting capital in that environment. So have a process, keep your ego and emotion out of the decision-making process. This is our mantra in this month's note, and it's been our mantra since inception. So what can we do for you? You know, we're approaching the end of the quarter. We're approaching the fourth quarter. I know a lot of tax loss harvesting rebalance gets done in the fourth quarter. A lot of conversations about not only taxes, but about, okay, what does my plan look like as you as the advisor talking to your client? What does the plan look like for next year and beyond? Because plans can change and goals can adjust. So how can we help you with that? Whether it's helping you generate reports, illustrations, giving a talk or a presentation to your clients or your stable of advisors, we're happy to do that. We're doing that now with existing clients. We're doing that now with prospects. So I would just invite you to reach out to us, have a conversation, see how we can help you in your practice, whether it's articulating a message or generating some data. So if you want to get in touch with us, my contact information is on the screen. You can go to blueprintip.com to see more about the team and to find out who specifically you might contact. But if you want to reach out to me, my email's on the screen as well as my number. I would encourage you to reach out to us, even if it's just to discuss an idea. We love ideas and we love brainstorming, so we're happy to do that. So with that, I hope you have a great month, and I'll look forward to seeing you here at the end of September. Thanks.